Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, 8th day of October 2025, and this is the evening report for gold and silver. There is an article in Market Watch today with the headline, Gold Above $4,000. Is it too late to add it to your 401k? And the article goes on to say, no, but there's a catch. Most ordinary investors have missed the golden boom. It's been 14 years, almost to the day, since a prominent New York businessman said booming gold prices were the sign of collapsing faith in the U.S. currency and the U.S. economy and the result of a terrible presidential administration in Washington, D.C. The businessman, Donald J. Trump. In fact, when Trump made that statement, gold peaked back then during the first term of President Barack Obama, with gold sitting right around $2,000 an ounce. It peaked at pretty much the moment Trump made his comments, something that the author at Market Watch warned might happen. Now, Trump is the president and gold just hit $4,000 an ounce, an all-time high. It has risen 50% since the last year's presidential election and by just under 50% since the inauguration of Donald Trump. Today in New York trading, gold gained $52.70. That is a net gain of 1.31%. Gold recently broke above $4,000 and closed above $4,000. Today, gold closed at $4,060.60 after factoring in a gain of $52.70. Gold has been open in Australia for approximately 1.5 hours, and as you can see, it has come down $27.60 from the New York close, still above 4,000 at $4,032 and change. I've just created a 1-hour standard candlestick chart of December gold futures. You can see that the opening price, this would be at midnight Eastern Standard Time when gold was at $4,037, and then over the next few hours would trade to the intraday high at 12 noon Eastern Standard Time of 4,080 before coming down for the last 6 hours to take us to our current candle and current pricing with gold above 4,000 at $4,037. It is too early to identify this red candle as the beginning of a market correction. We can see that on multiple occasions during this last leg of the rally, gold has corrected or declined for either a single day, a one-off, or at maximum 2 days, and that occurred on Wednesday and then Thursday, the 18th day of September. However, if we get a couple of down days and a series of lower lows, lower highs, and lower closes as we did here that suggest we could be looking at a correction, where would we expect gold to then find support? To best plot a possible correction, and as I said, we have no concrete evidence yet that that's what we're witnessing. It will take a day or two to get price confirmation that that has happened. I have entered a basic Fibonacci retracement, starting with gold at 3126 mid-May 2025, up to the all-time record intraday high of $4,090, a correction with a retracement value of 23.6% would take gold to $3,860. A 38.2% fib retracement would be $3,719, and a 50% would take gold to $3,606. The next thing we want to look at is there any historical data during this timeline that could help find potential areas of support? And the short answer is no. We've got a series of tops. We'll call this a triple or quadruple top on our daily chart from the last week in April, first week in May, middle of June, and the first week in August. One final thought, it is now 2:02 in Honolulu and 8:02 in New York, and gold has come down significantly from the last section that we did with gold above 4,030, now trading between 4,020 and 4,025. We will see if this selling pressure now unfolds as a real price correction. And as I said, these are the levels we would look to re-enter the market, 37.20 up to 38.60. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.